Shares of Starbucks moving lower this morning. The company reported weaker than expected results, while same-store sales declined for the fifth consecutive quarter. But CEO Brian Nichols saying the company is seeing momentum in its turnaround plan. Joining us right now with more is Sara, Senatore. She's the Bank of America Securities senior restaurant analyst. You listened to the call last night. The numbers on the same-store sales, not great, but Brian Nichols saying he thinks that he's seeing a turnaround. What do you see?
I think he's right. You know, a lot of the early leading indicators are not ones that necessarily an outside observer would see. Things like, consumers choosing Starbucks as their first choice. Certainly some of the data on their more occasional customer, the non-rewards customer, coming back more, in each increasing quarter sequentially. I think those are all positive signs. And in fact, even the same-store sales in North America, considering all the headwinds we saw for the industry, weather, calendar, in the first quarter, were actually, I would say, a mark of improvement sequentially.
So you look at the stock at 77.09. What do you think it's really worth?
Our price target is 101. I think, when we look at the valuation, when we look at the depressed earnings, there's a lot of upside from here. This is a core, solid restaurant brand, and I mean that globally. We're seeing performance in 8 of the top 10 international markets that are flat to positive. Again, the trends are headed in the right way. Starbucks is clearly under-earning versus what it's done in the past. We think there's a lot of upside to earnings and to the multiple.
In terms of what then the market doesn't understand, is the stock obviously down close to 10% right now?
Yeah, I think it's, like I said, I think the what we're seeing now is a lot of front-loading investments behind people. And then we'll start to see both that translate into better top-line performance, but also we know from what the management team has said that they're going to be looking closely for offsets, ways to fund the investments they're making in people, whether it's through productivity or, we've already seen on the G&A line, there's been a lot of delayering of headquarters staff. I think there's a lot of room in this business, considering, we were at restaurant level margins that were in the mid to high 20s not too long ago versus down around 13% in the most recent quarter, operating margins that were, 18, 19% at peak. There's clearly been a lot of profitability leakage that I think, those are things that they can find and they can recover. And this will be a better business coming out of that.
What was your take on just the international business? I know there was a lot of questions about what's happened with tariffs and whether that'd be impacting the business going forward. And not so much the cost of beans, which we should talk about, but more about whether, folks in China were going to be going to their stores. It looked like actually sales internationally in China looked up to me. Not necessarily total volume, but transaction number. How does that play out in your mind?
Yeah, that's right. I think the international markets were quite encouraging for a couple of reasons. One is, again, it's a mark of how strong the Starbucks brand is. The business is doing well. It's doing well in the UK, where there's a lot of coffee competition. It's doing well now in China, where obviously there's been a lot of concern both from a macro, economic backdrop, but also concerns about U.S. brands. And we're really just not seeing that. So again, I think the fact that the same-store sales were better than expected in international markets is a good sign, both in the near term in terms of economic, or earnings performance, but also just longer term in terms of the value of the brand. And I think, when we look at this business globally, we do see a lot of room for runway there in terms of unit growth. Their penetration outside the U.S. is dramatically less than inside, and they think that the U.S. can double.